According to Reuters, U.S. weekly jobless claims fell, indicating a stable labor market. The drop in new claims suggests that the workforce remains robust, with fewer people filing for unemployment benefits. This development is seen as a positive sign for the economy, potentially influencing monetary policy decisions and boosting consumer confidence. The data reflects a single week, so longer trends are needed for a full assessment. The decline in weekly jobless claims may influence monetary policy decisions, as a stronger labor market can affect inflation expectations. It also has the potential to boost consumer confidence, encouraging spending and investment. However, the data covers only a single week, so policymakers and analysts will likely wait for additional weeks to confirm the trend before making significant adjustments to interest rates or other economic measures. While the drop in weekly jobless claims signals a strengthening labor market, the data reflects only a single week. Analysts caution that longer trends are needed for a full assessment of the labor market's health. Uncertainty remains about whether this decline will persist or if it is a temporary fluctuation. The story highlights the importance of monitoring subsequent weeks to confirm the stability of employment gains. U.S. announced changes to visa regulations for foreign students and journalists, signaling a shift in immigration policy that could affect international academic collaboration and media coverage. The announcement was made by the U.S. government, though specific details were not disclosed in the initial statement. The revised visa rules could affect international academic collaboration, media coverage, and diplomatic relations, according to the report. Stakeholders in academia and journalism are monitoring the changes closely, as they may alter the flow of scholars and reporters into the United States. Implementation timeline and specific policy details remain pending, leaving uncertainty about when and how the new visa regulations will take effect. The lack of clarity has prompted calls for further information from policymakers and affected parties. U.S. gas prices edged up again today as tensions between the United States and Iran over the Strait of Hormuz intensified. The rise followed reports of increased military activity in the region, prompting concerns about potential disruptions to oil shipments. Analysts noted that the price jump reflects heightened risk premiums in the market, with traders reacting to the latest geopolitical developments. The move underscores the sensitivity of fuel costs to regional instability. The recent uptick in U.S. gas prices may be temporary, as broader market factors also influence outcomes. While geopolitical tensions contribute to risk premiums, supply dynamics, refinery schedules, and seasonal demand shifts play significant roles in price movements. Analysts caution that without sustained disruptions, the price increase could normalize. The uncertainty remains as market participants await further developments in the region and global oil supply chains.